Many thanks for the introduction, Kevin. Good morning, ladies and gentlemen. And many thanks to Marine Money for hosting us here in the hotel today. My name's Peter Stonor. I'm a partner with PAS Advisory Partners. We're delighted to welcome Ahmed Al-Shukaili here today. Ahmed is Chief Financial Officer of Asyad Shipping Company, which he's been with for, I think, almost 20 years. And he expertly steered the company through a very successful IPO on the Muscat Stock Exchange in March last year. I was fortunate enough to support Ahmed and Oman Investment Bank and the wider syndicate on the IPO. And thoroughly enjoyed being in Muscat this time last year rather than London, so that was much appreciated. So, Ahmed, the IPO was very well received. It priced at the top of the range. It raised over $330 million and gave the company an IPO market capitalization of $1.7 billion. And attracted anchor investors, including Qatar Investment Authority, Mars Development. So what were the core messages that really resonated with the institutional investor market about the company?
Thank you, Peter, and happy to be here presenting our experience on the last IPO we have done. Of course, I think we are happy that our equity story and position of the company were welcomed by a lot of institutional investors. And the core reasons for that was mainly around our diversified portfolio. We have a fleet on 5 main segments: oil, LNG, product tankers, as well dry bulk and containers. So that was really welcomed by a lot of investors to protect from the volatility in the market. Of course, also we presented our blue chip customers and strong contracts, and backed by the sovereign fund as a company owned more than 80% by the government of Oman. That was a good also support to investors to give them some of the maybe the feasibility of the company. As well, the mix of our very strong long-term contract in place, supported by experienced management to run short-term also exposure and the spot market. That also was a good boost to our EBITDA margin and also the profitability of the company. And finally, the Asyad Shipping proved that it is high cash generative business, which give comfort to the investors and a lot of stakeholders that this company can grow further and can pay a very strong dividends to its investor.
Absolutely, and investors love dividends, particularly in the shipping sector. Strong story, diversified customer base, as you say, blue chip, contracted growth. It's a kind of quite a unique process going through an IPO, so always good to ask from a personal standpoint, what were the key learnings that you had from the process? What was perhaps things you didn't realize at the outset? What advice maybe would you give to private ship owners who may be considering going to listed markets and doing an IPO?
Yeah, I think the whole process was new for us. This is our first IPO. We didn't even have a big bond issuance before, so it was really, everything was a learning for us, and it was a very challenging as well as enjoying journey for the last 2 years. So preparing the company for almost 9 months to 1 year, doing many hard closing and processes, appoint a lot of advisors and also consultant along with the auditors. That was all new for us. Later we also appointed the investment banks with the lawyers, with also a lot of other auditors to check our what we will present in the prospectus. process, and all this validation of many things was really taking a lot of our time. And at the same time, we have to run business as usual with a challenging period with change and volatility in the market continues hitting everyone. And that's we have to keep an eye on what we are doing, plus also to prepare the company in the right timing, and also on the Muscat Stock Exchange, what is the best time to also list the company, as well as the best time on the shipping also volatility market, what is the right time to present the company on the from market point of view. So that was actually a challenging journey, but it was worth doing. I really appreciate the finance team efforts and the management. They keep really very positive and also always encouraged to give more on this.
Yeah, you kept the team very busy, I remember. Yeah. But no, shipping IPOs are sometimes few and far between, but you have to be ready for when that window opens, you know, both within the equity markets, but also within the shipping markets. And so looking back 2-3 years with that profile that works, and then in the short term, the markets being ready to go is always a challenge, but getting that right's key. Yeah. I guess it's a big change going from being a wholly state-owned company to a public company, and that transition to public company changes, you know, potentially governance and strategic decision-making. What do you think are the, you know, sort of main changes you saw in that transition, and what do you see as the benefits of now being a listed company?
Indeed, it is a change. Regardless, we were before a well-governed company, and we follow a lot of important code of governance. However, being listed there will be a change for sure, and we noticed that in the focus of the management and also the staff deliveries. They really care about what their decision will lead to, because now we have to present that to many stakeholders, and we notice also the decision making become more agile and more faster, including even the board decisions, because everyone now look, this will now be watched now by many investors, not only to satisfy one stakeholders, and you can do it at any time. So that's actually a big change. And the other change is the stakeholders. We were dealing, as you rightly said, with one stakeholders. Now we have multiples, and including the compliance institution, thousands of investors. We change on how to present the company. The quarter closing was yes important, but now it has become much more important, because we have to find out what is the reason for all of our transactions, where we did good, and what was the challenge, how to present it to the public, and there are a lot actually of change being.
And that transparency is very much appreciated by the market and by investors, who you now have to see on a regular basis. But I think we're seeing the results. I mean, it was March last year. The share price is up over 50% since that time, in the space of 10 months. So it's been one of the strongest performers, not just in the region, but in the shipping market in general. What do you see as the main reasons for that sort of stellar performance in the last 10 months since the IPO?
We are very happy about the performance of our share. Actually, we are reaching 60% above the market. So that's really, we are proud of our achievements, how we care about the aftermarket dealing. So we were very sensitive on the price we bought at IPO time, and that also our liquidity, actually the stock was really improved in the market, which helped a lot on being so average of our liquidity reached as a $10 million. Last week we even reached 22 million one day, and we were the highest in the stock exchange as a company traded. Our share, you consider one of the best share in the Muscat Stock Exchange in the previous period. I think people believed on our strategy and delivering on and executing the strategy we promised during the IPO roadshow. The shipping industry industry by itself is also giving us a good vibe on shares, because there are a lot of increase, specifically in the VLCC market, which was welcomed by a lot of investors. We also acquire a very good fleet the last 2 years, and sold some of our fleet with a very, very good price. So that was also appreciated by the market and by the investors.
Yeah, so I think it's a combination of the strong underlying story demonstrating what you said at IPO has been put into practice. Strong shipping markets, but also investors understanding the story now you're listed and tracking that. And again, the liquidity in particular is really strong, up to over $10 million a day, which then attracts further interest. So that's fantastic to see. So turning to the business more, Asyad Shipping, as you say, operates in those 5 main segments: gas, crude, product, bulk, containers. They all sort of operate in slightly different, capex requirements, return profiles, and rate cycles. So how do you manage, those different segments and manage across them as a management team?
Yeah, I think the main things, we are flexible toward those segments. We are really looking for the opportunistics in all of those segments. We believe to remain in this diversification and investing in all of the segments, but not necessarily that we will take this segment this year or the other segments. So we believe that we will continue that where is the opportunities, and Oman also giving us, and GCC giving us also a lot of good opportunities where we have taking advantage by being located in Oman. So, and we build experience around our segments. So we started slow in some segments by chartering ships from the market, and then we build around it by owning ships. We usually own the ships ourselves when it is coming for long-term contract, and also when it is coming for big ships like the LNGs, like the VLCC, the VLOCs, we have the Newcastle Max. So those we own it ourselves, and then we build around it the smaller segment.
And again, it's remarkable. You joined almost 20 years ago to Asyad Shipping, to see the growth of the company across those segments since then, and very exciting then to look out to the next 5-10 years. I guess one of the unique features as well, which was interesting to investors and came up at the IPO, is your industry-leading margins of 60 to 70% EBITDA margin. How do you achieve such high margins? I'm sure the audience is interested to know, given their own businesses, and given the sort of extensive fleet growth that's coming up. How do you expect to sort of maintain those higher margins?
Of course, there is a lot of efforts done by the management and by the decisions we have taken. I think the younger fleet and the diversification we are going ahead with is really helping us on making a good margin. The offering and the blue chip customers we have in place, they are playing a good role on improving our margin. So we are combining a long-term strong contracts, of course, with spot also exposure, which boosts most of the time our margin, because we are operating in 5 segments. So we are not limited to a specific segment. If there is any growth in any segment, we are already there. We watch a lot and give a big attention to the cost. So the discipline by the management, we offer integrated solutions. So we manage the ships ourselves. We do the whole also chartering and operation ourselves. So we watch the cost carefully to save wherever possible. We operate internationally. There are a lot of good mix of the long-term contract and short-term, which really support the EBITDA margin. And this, of course, gone through experience in many years. So we prove that EBITDA margin we achieved for the last more than 4 years now.
No, and again, it's fantastic to see for all those features, both on the revenue and cost side, and as you mentioned, the integrated operation that helps, particularly on the cost side. You mentioned sort of in terms of spot and chartering and the mix across the business. You have a pretty good mix of owned and chartered fleet. What is the sort of approach to, when you're chartering contract duration and the charter structure? What's the policy across the Asyad Shipping fleet?
Yeah, usually we own our own fleet when it is coming for long-term contracts, important type of ships. So we make sure the quality of ships is within our control. So we don't charter ships just for sake of growing. Even the one we charter, we watch it for a while, and then we pick the right assets from the right ship owner and operator to make sure we satisfy the quality we are offering to our clients. So that's always go segment by segment. We mainly charter in the product tankers and dry bulk, the smaller ships like the Ultramaxes and Kamsarmax. So that's where we charter from the market. We mostly own the LNGs and the VLCC, the VLOCs, as mentioned earlier. Of course, we have a hedging strategy, so we don't expose the company for as a target for more than 30%, 30 to 40% to the spot. We experienced that for a while. We were even having 100% exposure, but we feel it was also, yes, some years it works very good with us, but maybe it works the opposite in the other year. So we have put a target always to watch ourselves that we hedge as much as we can for our exposure. And I think that's worked well with us.
No, absolutely, and I think investors very much appreciated the longer term contracts that were put in place and the backlog that they could see, and the mix between longer term charters, medium term charters, and spot, which in good times again can lead to sort of excess returns. And I guess capital discipline is also key for investors. So how do you think about allocating capital across the fleet growth, or thinking about fleet growth, balance sheet optimization, dividends, potential M&A? How do you think about your allocation of capital going forward?
Yeah, I think we always trying to be balanced in all of these elements. So we want to maintain a very good growth for the company, because that's important for the future of the company, renewing our fleet. We also being listed in Muscat Stock Exchange and GCC, they are also dividends driven. So we have to make sure that we are also good payout ratios. While now, because of the liquidity in the market, they are also increase in the stock itself. So we may relax in future the dividends, but we still have to be a good dividends payout. I think we are blessed with a very strong balance sheet, effective cost of debt, backed by very strong contracts, and we have potential for a very good contracts which will support the company to maintain its performance, as well as satisfy the investors in terms of dividends and growth. We are watching carefully our net leverage, so we don't want to go maybe above 3.5 to 4 times as a net leverage. And I think this is already built in our 5 years business plan, and it's working well with us.
No, it's a strong balance sheet, and again strong capital market performance. Again, I mentioned the IPO market capitalization was 1.7 billion. It's now up to 2.7 billion dollars and growing. In terms of that capex program and fleet growth, at the IPO, I remember you laid out a plan for $2.3 to $2.7 billion guidance on capex over the coming years, which I imagine is similar now. How are you thinking of funding that program. You mentioned sort of the balance sheet sort of leverage target, but what's the sort of funding for that capex in terms of operating cash flow in the company, new debt, bank or other, leasing or kind of equity funding?
I think we will use most of the things as you mentioned. Of course, this is already built in our business plan. The target is to invest 3 billion in the 5 years. We already executed almost 1.5 out of those. There will be a lot of deliveries in 2026. Good vessels with the good contracts are coming in 2026. Mostly we will fund those from our own balance sheet and cash flow from operation, as well the debt we are getting. We are getting even very cost-effective debt, better than what we have put in our plan. Which is also helping our cash flow and also our dividends payout later on. We are selling also some of our old fleet, a lot of the old fleet so going for sale. That's also cash coming from those unencumbered. Most of them we already pay the whole debt of those old vessels. So they will be targeted mainly for the growth of the company. And I think if needed and if the expansion become even more than what we are planned, we are now listed, so we have the capital market which we can also utilize to make sure that the growth of the company is as better.
Absolutely, and a supportive investor base. I guess we've got time maybe for one or two more questions. Just quickly on the IPO, ESG and decarbonisation were important themes that were sort of front and centre for investors. How are you approaching kind of that in the context of fleet renewal and emissions reduction in a commercially disciplined way? And what are the sort of technologies that you're sort of monitoring most closely?
Yeah, I think as mentioned also in the previous panel discussion, so we are not trying to worry too much about the future. So we are going ahead on the new technologies. So most of our vessels to be delivered will have the latest technology, and they will be equipped with what is our blue chip customers require. So we believe there will be a good premium we can get and satisfy our clients. So those are our target in the new fleet. We are modernizing our fleet, so we will always try to have a younger fleet as per the target, because that's keep us very competitive in the market. The old fleet, if they remain in with our fleet, they will be also retrofitted with the best technology we can put, which will improve also the ESG targets and also the company image to be always competitive and attracted by a lot of clients.
Great, Ahmed. Well, look, final question, and one the audience is always keen on, is the shipping market outlook. So from your perspective, where do you see us in the cycle today? I know you're across many segments. What's your outlook on rates for this year, and how's that perhaps shaping your business strategy?
I think it is very difficult to predict the market, as you know, it keep changing. However, the 2026 as a start, it looks very positive for us. There is a good potential that we will be able to get what we are planned to do. The VLCC rates are very high, and we are getting 4 new VLCC on this year. We believe that the market will be positive on most of the segments. We already the LNG is of course still struggling, but we are attached with a contract, so that will not harm us much. Let's say most of the dry bulk and the products is already also improving as a segment compared to the previous year. We believe the market is good, normalized. Of course, some of the giving us very high level, which will support the other maybe segments which is not performing in the very high level. So we believe the market will be good for us to deliver our performance.
Well, fantastic. Well, again, great to see a very positive story and a rare thing in a shipping IPO. We all obviously hope there'll be many more, but great to see kind of the performance since the IPO, and very much appreciate Ahmed coming here to tell us more about the story. So thank you very much.
Thank you, Peter.